This time, property prices will finally crash. Whenever something bad happens in the world, you will start hearing the same statement again and again. People will say, this time property prices will finally crash. You hear it when there is a war somewhere in the world. You hear it when the global economy slows down. You hear it when interest rates suddenly go up. And every time the global situation becomes uncertain, people begin asking the same question again and again. Should I wait before buying property? Because prices might just fall. Now, on the surface, that thinking actually sounds quite logical. If businesses are slowing down, if the economy becomes weaker, people are worried about their jobs or their income, then naturally, many people assume that property prices should fall, right? Because if people are worried about money, fewer people will buy property. And if fewer people are buying property, then prices must fall. At least that's what many people believe. But if we slow down and think about it carefully, the relationship between global crisis and property prices may not always be that simple. Sometimes prices fall, sometimes prices slow down, and sometimes, surprisingly, they continue moving in a completely different from what people expect. And that is exactly what I thought. It will be interesting for us to start a conversation about this topic today. Now, I want to be clear about something first. This video is not about predicting the future. Nobody can accurately predict property markets all the time, And this is also not financial advice. Instead, what I want to do is to explore a few ideas together with you, because property markets are influenced by many different factors happening at the same time. Economic factors, interest rates, government policies, buyer behavior, investor confidence, all these things interact with each other. And sometimes the final outcome may be very different from what people initially expect. So the question becomes very interesting. Will property prices actually fall during global crisis? Or is the story more complicated than that? So in this video today, I want to explore 3 simple ideas that might help us think about this question. The first idea is about how global crises sometimes move money around the world. The second idea is about interest rates and affordability. And the third idea is something people often forget when talking about property markets: human psychology. Before we continue further, if you find discussions like this interesting, do consider helping the channel by liking this video, leaving a comment with your thoughts, and subscribing to the channel. This support really helps the channel grow, and it also tells me what kind of property topics you would like me to explore in future videos. Alright, so let's start with the first idea. When global crises happen, uncertainty increases everywhere. Businesses become more cautious, investors become more careful, companies slow down expansion plans, and many people start thinking about how to protect their wealth. But here is something interesting. Sometimes, during uncertain times, money does not disappear. Instead, money moves. Investors begin looking for places where they believe their assets can be safer. Places with strong rule of law. Places where property ownership is clear. Places where regulations are transparent and stable. And this is where cities like Singapore often come into the conversation. Singapore has long been viewed as a relatively stable environment. The legal system is clear, property ownership rules are transparent, and housing supply is structured and managed carefully by the government. In Singapore, it's the Ministry of National Development through their statutory boards like Housing and Development Board and Urban Redevelopment Authority of Singapore. Because of all these factors, some investors may view Singapore property as a long-term store of value. Now again, I'm not saying global crisis will definitely push property prices higher, but the key point is this: demand does not always disappear. Sometimes it simply shifts. Now let's move to the second idea: interest rates. Interest rates play a very important role in property markets because most people do not buy property fully with cash. they rely on housing loans. And when global crises happen, central banks around the world often adjust their interest rates policies. Sometimes interest rates go up to control inflation. Sometimes they go down to support the economy. Now, when the interest rates increases, borrowing becomes more expensive. Monthly mortgage repayments become higher. And naturally, some buyers may slow down their plans. They may prefer to wait and see how the interest rate environment develops. When borrowing costs increases, affordability becomes a very important factor. Buyers may adjust their budgets. Some buyers may step back temporarily, and this can influence how active the market becomes. But again, this does not automatically mean property prices will crash. It may simply mean that price growth slows down. Now, the third idea is something that many people underestimate: human psychology. Property markets are heavily influenced by confidence. When people feel optimistic about the future, they are more willing to make long-term commitments. And buying property is definitely one of the biggest long-term commitments most people will ever make. But during global crisis, uncertainty can change how people think. Some buyers become more cautious. They delay their purchases. They want to wait until the situation becomes clearer. But interestingly, there is another group of buyers. These buyers may see opportunities during uncertain times. In the same environment, you can have two completely different reactions. Some people wait, others move forward. And this mixture of behavior can create interesting dynamics in the property market. Which brings me to my personal thought on this topic. Personally, I think the relationship between global crisis and property prices is really simple. Global crisis can create downward pressure in certain situations, but there may also be factors supporting the market. Capital flows, interest rates, and human behavior all interacting together. So today we explored three simple ideas: capital movement, interest rates, and human psychology. Now, I'm curious to hear your thoughts. Do you think property prices usually fall during global crisis, like the war in Iran right now? Let me know in the comments below. And if you enjoy conversations like this about property trends, do subscribe to the channel for more discussions like this. See you and bye-bye.